Given the decline in stuff coming from China to the United States, we are starting to see where the cracks in the economy, where the layoffs might start. Early indications are that the port of LA, one of the major hubs for goods originating from China, is that they expect a 35% decline in cargo starting next week. Yes, folks, this is becoming real and becoming real very quickly. In fact, Torsten Slok, chief economist, is really painting a picture of where the economy will start breaking and where layoffs will show up first. Again, Torsten Slok is highlighting the layoffs will begin first and foremost in domestic freight. If you don't know what that means, think about trucks going to the loading docks, loading, and then driving the goods to the next location. Also, Torsten Slok is highlighting that the retail industry will start to see layoffs. Think about folks who don't have the inventory, can't get them, having to announce layoffs to just cover the bills. I really think the small business area, small business retailer, whatnot, actually, in very short order, could be facing bankruptcy concerns and potentially liquidation and store closures. If your business is reliant on imports from China and your margins are, I don't know, what do you want to think a gross margin is? Let's just say a gross margin is 25% and a net margin is 10. You're done. You're out of business. You've got to close shop. You can't source stuff fast enough. You can't get the quality. And we could really see small businesses start taking this on the chin as soon as June, right? June is 4 weeks away. So this is becoming real and becoming real very quickly. To that end, Paul Tudor Jones, one of the legendary Wall Street folks, and you don't know who Paul Tudor Jones is, do yourself a favor, put him in Wikipedia and read about him. Very quickly, Paul Tudor Jones really made his name in 1987. If you don't know what happened in 1987, again, go back and look at history. That was Black Monday. And Paul Tudor Jones not only called the crash, he profited from it. Paul Tudor Jones was set up for the right way on that very day where most people were losing 20, 25, 40% in individual stocks. And he called it. He set up the trades, and frankly, he won. So Paul Tudor Jones is also not normally a bear, right? There are people like Peter Schiff who have been calling crash every year for forever. Paul Tudor Jones is not one of them. In fact, I am not aware of Paul Tudor Jones stepping out on a limb and calling a crash except for 1987. He may have. Again, I don't study Wall Street as much, but I'm just trying to paint a picture that this guy is not, Chicken Little. He's mainly bullish, right? He's a stock guy. So what did Paul Tudor Jones say today? He said the stock market will hit new lows. New lows are coming. Even if Trump cuts China tariff to 50%. Right? Currently, I think the tariff, what is the tariff? 245%, something like that. Paul Tudor Jones goes on to say that the tariffs will be the largest tax increase since the 60s. Given this large tax increase, Paul Tudor Jones is saying growth will be subdued, -2 to 3%. This is really what I see coming. And again, folks, when you look at an economy that is a three-legged stool, I don't know how you don't get there also. Again, the three legs are government. And I don't think there's any question that government is spending less. There is private enterprise, small and big business. I don't think there's any question that most businesses are spending less. And then there's the biggest leg of the stool, which perhaps is the most uncertain today, and that is the consumer. I don't know how, Q2 is not negative, and maybe we actually get the recession call, because again, Q1 was negative 0.3%. Again, I would strongly suggest that you pay attention to Paul Tudor Jones. Certainly research him, make up your own mind. This is not, again, someone who calls crashes routinely. CNBC just went out and did a survey, and basically it is saying stagflation is here. Stagflation is here. They see that the coming unemployment rate will rise from 4.2 to 4.7, and that inflation will rear its ugly head and move from 2.4 to 3.2%. The interesting thing about this survey, again, is Wall Street is still expecting the Fed to cut. I don't know about you, but I don't know if that's right. In this survey, they talked about 2 cuts in 2025 and 2 rate cuts in 2026. I want to ask you, what we have learned from Jerome Powell in the Fed, do you think that inflation essentially going up 50%, right? That's 2.4 to 3.2. Maybe it's a third. Maybe it goes up 33%. And that unemployment rate goes from 4.2 to 4.7. Do you think that is a recipe for the Fed to cut? I don't. Again, 4.7 is undoubtedly, I don't know, 1 million more people unemployed, 1.2 million, something like that. I don't think that's enough. I think if the unemployment rate goes over 5, the Fed cuts. I don't think 4.7, again, 4.7 in historical context is full employment. It just is. And I don't think 4.7 is enough to get the Fed to cut. The Fed will instead look at inflation and go, we got a problem. It's going up again. And again, you remember the last time it went up, it went all the way to 9.1. I'm not saying it's going back to 9.1. I'm just saying the fact that it goes up again will cause the Fed to stay on pause. In my opinion, if the CNBC survey is correct and unemployment goes to 4.7 and inflation goes to 3.2, we will have 0 cuts. In fact, a raise might be in order, but I will stick to the fact that I'm calling for 0 cuts. In addition, the CNBC survey said 45% of surveyed money managers said stocks are not priced for a recession. Again, I remind you, Paul Tudor Jones essentially said the same thing. 52% of the surveyed said stocks are only somewhat correctly priced. Again, talking your own book, I think. 69% of them said they are somewhat or significantly overpriced. I find it interesting when folks in the field actually admit that things are overpriced. It's pretty interesting to me. Don't know if you know who Financial Samurai is, but Financial Samurai is something I followed when I exited the rat race in 2018. Young man, I don't know the exact details, but I think he retired at like 34 with some stock market wealth, lived on 4%. I believe he's gone back to work since then, but I digress. He wrote up an interesting article on CNBC talking about the 4 get-rich habits of self-made millionaires. As a self-made millionaire myself, I thought I would read this and see what he had to say, figure out what the 4 get-rich habits are. Number 1, consistently saving and investing. I think that makes a lot of sense. Said another way, live below your means, create discretionary income, and become an elite investor at something. The 3-step wealth formula right there. Number 2, building multiple streams of income. Now, I don't necessarily agree with that one. I think most people that I know who became a millionaire in one stream. Now, there obviously are exceptions. But in my experience, again, probably because I'm a real estate guy and he is a stock guy, I suspect in my world, most people become millionaires with a single stream. And then as they are millionaires, they create additional streams. But Why quibble? Number 3, think in terms of opportunity cost. This one is interesting to me because I think he's right, but we disagree on opportunity cost. If you don't know what opportunity cost, it's basically what is the best thing you give up by doing said thing. In the stock world, if you buy $1,000 in Berkshire Hathaway, it means you can't buy $1,000 in Apple, for example, or Tesla or any other stock. I actually think opportunity cost should be done in time. This is a big part of my $99 Get Your Money Right course. It really highlights the fact that you need to A, understand your discretionary income. It's not how much you make. It's how much you make minus your fixed expenses. And then there's a number left over. Take that number, divide it by hours in the week. And that is how much money you make, how much discretionary money you make each hour. Let's say, for example, you make $10. $10 of every hour you work equals what your discretionary spending is. So if you wanted to buy a $100 item that is discretionary, you have to put up 10 hours of your life. That's an opportunity cost. I believe opportunity cost in the real world should be calculated in time. All of us are selling little slivers of our life called time for money. I believe you are best informed by turning that into a discretionary dollar amount per hour so that you can make your choices. Do you want to buy that $100 thing and sell 10 hours of your life? If the answer is yes, buy it. If the answer is no, don't. That's what opportunity cost is for me. And then number 4, an unwavering belief that they deserve to be rich. I got to tell you, I personally, this is just me, I could not disagree with that one more. I don't know. There was certainly no unwavering belief. Dude, I didn't even know it was possible, right? I'm just some guy busting his ass, 1, 2, 3 jobs, married at 19, trying to figure it out. I had no belief that I could be rich. None. I just knew, again, that if I kept getting 1% better each day, that eventually that compounding would lead somewhere. So if I had any unwavering belief, it was just in doing the work. I believed if you focused and did the work, you would get better. And that's the deal, folks. If you want to get better at something, it's just about doing the work. I don't wear this hat for grins. It's kind of everything to me. Let's do me a favor. Let's congratulate people for joining school. We had a big day yesterday. Glad to see it. We had 6 people join school. I want to thank Monica, Troy, Matt, Rob, John, and Mustafa for joining school. Folks, school is everything. School is where you want to be. You want to get around other people doing the work. You want all the free education. If you want to talk to me, 8 a.m. Sunday morning. I go live almost every Sunday just inside school. In fact, I get this question, a flavor of this question almost every day. Michael, I read your book. I'm very similar to you. I'm young in my career, make a good income, and I want to get started in real estate. Can I have your time? Can I buy you coffee? Can I buy you lunch? Can I? And in the past, I used to sell hours of one-on-one time for $1,000, but that never filled my cup. It never felt like a good return for me, giving up an hour of my time to do that. So what I tell everybody to do now is join school. First off, school is way cheaper. It's 67 pennies a day. But more importantly, inside school, you're getting access to 350 other people going the same direction. Inside school, you're going to find hundreds of people just like you. So, again, I haven't all year, for the last 12 months, I haven't done any one-on-one consulting, and I will not do any one-on-one consulting. Instead, I will focus on school. I will give up an hour to school and do all of these things. So again, If you read One Rental at a Time and you're getting started, join school. If you have 1 or 2 rentals and you want to scale, join school. If you have 10 or 15 and you're looking at getting in the end, join school. I can't tell you. That is just the answer for everyone. And I'm so glad that Monica, Troy, Matt, Rob, John, and Mustafa all joined. And I can't wait for you to join and become part of it. To that end, since we're congratulating folks, let's congratulate Nicole for getting her next deal, and Jared. Congratulations, Jared. I owed you this card. Apparently, it didn't come in the mail, so I'm sending you another one. You will get that one hopefully in the next few days. We did get some earnings out. Let's go through those. We got Palantir. Palantir beat on revenue, met earnings, but really talked about I guess there was some slowdown in outside the U.S. So again, I think Palantir is taking it on the chin today. Ford suspends guidance and anticipates a $2.5 billion tariff impact. I'm actually surprised that more companies didn't suspend guidance, but Ford is another one. Mattel, the toy maker, pulls annual forecast and says we will hike prices. So again, if you are looking to buy some Mattel products for Christmas, you might want to get those early. The CEO said toy manufacturing won't come to America, but higher prices will. Over at Mattel, 20%, 1 in 5 of the products they sell are imported from China. If you want a comparison, their competitor Hasbro, 50% of their goods are sourced from China. Again, it is interesting to see how much stuff comes from China. Mike Simonson out with his weekly update about the real estate market. Apparently, 71,000 properties went pending in the week. That is up slightly week on week, but down 8.7% year on year. Price, $395K, is now negative year on year. Yes, folks, prices are going down. 744 active listings. That is actually up 2% week on week and 33% year on year. New listings were up 78,000. That is up 12% year on year. And Mike went on to say he expects next week to be up 80,000. So again, we are clearly getting more sellers and less demand. So an interesting article talking about the three worst college degrees for wages 5 years after graduation. The worst, actually, let's do the third one. The third worst degree is performing arts. Apparently, a performing arts degree will get you an average of $41,900 5 years after graduation. Number 2, general social science. That will get you $41,000 5 years after graduation. And the worst college degree, according to this survey, is foreign language. Foreign language will only get you $40,000 5 years after graduation. So if you have a kid looking at one of those degrees, know what you're getting into. Make sure they don't borrow a lot of money. That is for sure. Talking about school, remember, Sunday, we will be going live at 8 a.m. 2 weeks ago, we introduced you to the 50-40-10. Last week, we introduced you to Property Radar, putting all of those things together to get more deals off market, on market, all the like. We will do a live Q&A on Sunday at 8 a.m. You can find that on the calendar. I don't think I've posted the link yet, but I will. So I hope to see you there. DoorDash missed on revenue but beat on earnings. Also announced a $1.2 billion, yes, folks, $1 billion acquisition, all cash, for a company called 7 Rooms. Lastly, let's talk about deflation. Deflation is currently in the economy. We have talked about airfare, but I don't know if you've checked out energy or gas prices. We also have lower gas prices, and apparently also you can find some deflation in consumer electronics. Again, folks, I am of the opinion that demand destruction is much larger than the economists are currently calling, and that the true problem with the tariffs is going to be deflation as we get through this. Let's hope we get some resolution. Let's hope we get some wins. Let's hope we start feeling better and better about the economy, because as we started this conversation, Torsten Slock thinks layoffs are 4 weeks away, starting in domestic freight and the retail industry, and it probably only gets worse from there. Folks, like, subscribe, comment, become part of One Rental at a Time, join school, all of that good stuff. We will see you tomorrow morning at 7:30 a.m. 258 of you tuned in today for the live session. I just wanted you to know I appreciate you. It means a lot to me to look at that number each and every day and see that it is growing. You can also go out to Spotify. I don't know if you like Spotify or not, but you can now find all of our videos out on, or at least all of the audio out on Spotify, if you choose to watch or listen that way as well. Take care. Have an amazing day. Thank you.